Welcome back to CMB Connect, the podcast where we go behind the designation and we talk with industry leaders, certified mortgage bankers, about the decisions that really shape our industry. I'm your host, Val Buresch. Today's guest is someone I had the privilege of meeting in a very specific and a slightly nerve-wracking moment for her. I was on her CMB oral exam panel, and I got to see her think on her feet, connect the dots, and bring both head and heart to that conversation. She passed the CMB exam, of course, and now she's bringing that same mix of technical depth and real-world experience to her role as Assistant Director of Single-Family Loan Operations at the Tennessee Housing Development Agency, THDA. I have Jen Green with us. Jen, I'm really glad we get to continue that conversation in a little bit more relaxed way. Welcome to CMB Connect.
Well, thank you, Val. And I too appreciate that. I do have to say my heart skipped a beat when I saw your name on my panel. So this is a much lower, I won't say it's not high stakes, but it's slightly lower, than the oral panel.
Yeah.
So thanks for having me today.
That's right. And for those of our listeners who don't know, the CMB oral exam panel is not a joke. There are 3 CMBs sitting and staring at the candidate and grilling the candidate with all sorts of questions. But before we get into our main question, let me start with the CMB piece. Give us the 2-minute version of your CMB story. Why was the designation so important for you in that moment of your career? And how has it changed the way you think and operate as a mortgage leader?
So, my journey really began with MBA in general at the state level. I was introduced to TNMBA, which is the Tennessee Mortgage Bankers Association, back in 2018 and had a wonderful opportunity that was provided by Dana Abernathy and Retta Gardner through Future Leaders. And part of that first class, it was a very small class. We could sit around a board table and the connections made there and just really opening my eyes to the opportunities for development through MBA really started me down the path of, wanting to learn more and being excited to learn more. And, the further that I got into it, the more I realized just how much those designations mean and the connections that you make through them. I do feel that it has really helped shape the leader that I am today because it does take you through those deep dives. It connects you to individuals that you wouldn't necessarily have been connected to throughout the industry across the country, and has provided the opportunity to have an open forum for questions, mentorship opportunities that I may not have had previously. And so I was fortunate to graduate just a few years ago with my CMB. I did have Dana as my sponsor, and so I was very lucky with that. She's a fantastic sponsor, and really had the opportunity to apply it towards my why, which was affordable housing. And at that point in time, I was looking to potentially make a change in my career, right? I had spent time in correspondent, I'd spent time in retail and warehouse, or I should say wholesale. And I really wanted to, look at the next 20 years and go, what impact do I want to make on the industry? And so this has been a great opportunity to help me move that goal forward.
Jen, you already talked about your private sector correspondent lending experience, and you brought that experience into your current role at THDA. And I'm curious, how does that private sector mortgage lending, correspondent lending operations experience shape the way you run single-family loan operations in a state housing finance agency environment?
Sure. So thinking about it from the position that all lenders operate differently, right? They are all structured differently. maybe the way that they handle certain tasks are managed in a different manner. So kind of taking a chance to think about what did I see from the correspondent side of the house, and dealing with those lenders who are providing a service to the borrower who we are not going to speak to, but who they have to manage a relationship with, and understanding internal hurdles, or perhaps a series of calls would be beneficial for a lender. Those kinds of approaches, I think, are really shaped from my time spent in correspondent, and having gone from everything from reviewing files to managing a book of accounts, I think really shaped my perspective of the various aspects that it takes to be a lender in the market for the correspondent side.
So you've seen both sides, the private, and now you're very deep into your state experience, government experience. From where you sit now, what's the single biggest misconception that mortgage professionals have about working with a state housing finance agency?
Thinking that we're hard to work with, or that it's going to add just days and days and days to the process. Ultimately, it may add about 48 hours to get that underwriting approval, or a commitment, I should say, on our end. But in general, the factor of we're just so difficult to work with. I think that when you think about housing agencies as a whole, we do have very specific, I should say, we have a box to work in,
Hmm.
right?
That's right.
Regardless of which state you're in, we are bound by certain guidelines that are provided by not only the federal level, but also provided by our state. And so thinking of through things such as um, having to learn a whole new program, really it's just a couple of extra items that may be different between our program and, say, your conventional program. And so really having the opportunity to get out there and explain that, hey, it's just a couple of days, or, you know, these are the things that we can work on, I think really helps dispel those myths.
That's right. And just level set us with housing finance agencies in general. The mission
Mhm.
is affordable housing, providing access to affordable housing finance, specifically around the purchase of a property. Do you work, does a housing finance agency work only with first time home buyers, or with all broader audience like LMI, for example, low to moderate income
Right.
borrowers?
Right. So we don't specifically look at just first-time home buyers. Now, there are programs out there at various state agencies that do focus on that first-time home buyer, first-gen home buyer. We have opportunities for, we do have an income bracket. The low to moderate income borrower is our niche. And we are looking to help these individuals get into homes. So we have opportunities for the first time home buyer, maybe somebody who hasn't owned a home in a number of years, or even, we have the veteran options that are available through our Heroes program. So we have a number of opportunities throughout the borrower segment, as long as they're following in, follow that low to moderate income borrower segment.
That's very interesting because it brings another question. We are very close to the end of the year and we are looking to 2026. And one question that comes to mind is, what do you think will matter most for those low to moderate income home buyers, specifically in the state of Tennessee? Do you think it's something like down payment assistance? Is it mortgage interest rate relief? Is it borrower education, counseling, or something completely different?
Right now, we're looking at affordability as a crisis, right?
Hmm.
Everything within their daily lives have increased in cost, and so buying that home may present an additional hurdle that they had not previously planned for. So I think it's a combination of a few of the items that you listed, and that would be, one, yes, the down payment assistance can be crucial to help getting them over the finish line, but also taking that counseling and really applying it to things such as How do I manage my finances? Um, I, if I have an HVAC unit that goes out, how do I manage that? So I think that it's kind of a two-prong approach there as far as what's really going to help that LMI borrower.
So those resources, I assume, yeah, are completely available on your website, so both borrowers and lenders can access them.
Yes. So there are opportunities for borrowers to be able to go out there and look at our website, and then also for the lender segment to be able to, look at our guide and also have opportunities for training. So we do have also opportunities for housing counselors. So we do have a group that actually they are
Mhm.
HUD certified counselors, and they work with HUD certified counseling agencies throughout the state, which provide that first time home buyer education course that they will need to have certification in order to apply for the file or apply for the loan.
This is an ecosystem. It's like, the old proverb that it takes a village to raise a child, but it also takes a community to provide those services to LMI home buyers on their home buying journey. And it seems like THDA provides an amazing service for this segment of the home buyers.
Yeah.
But for the mortgage bankers who are listening to our podcast and who want to lean into specifically THDA programs over the next year, over the next couple of years, what are one or two very practical things that they should be doing now to prepare for that? Whether should they be doing loan officer training, process design, anything else?
Right. So we look into 2026, I would highly encourage the loan officer training opportunities. They are offered throughout every month. You can schedule them. They have all online training opportunities. And also, there are opportunities through our business development group where they can schedule some one on one time for their team. Um, another thing too is just making sure that everybody understands what is the program and what are the requirements of the program? So as we move into 2026, I think as an industry, we're wondering what's next, right? So whether that be a regulation standpoint or whether that be well, what are they going to require now kind of standpoint, I think having a thorough understanding of what our programs are and knowing how to apply that to their borrowers because there are opportunities within the DPA space that are outside of THDA, but um, I would highly encourage them to utilize their state agency.
Yeah, there is so much opportunity for education and for learning. And we started this conversation with your perspective on learning and how you wanted to also get as much training and education as possible. I think when we as mortgage professionals are well versed in our domain, we impact the borrowers in a positive way because we bring those
Yeah,
resources to them.
absolutely. It's all about meeting them where they are,
Yeah.
right?
And for the lenders who are listening to our podcast, what's one way you'd like them to think differently about HFAs and one thing you'd love to see them actually do with THDA over the next year, for example, next year?
So, HFAs across the country operate slightly differently. We're not all the same, right? And I know that that can be a hurdle for, let's say, a national lender. However, when you think about it at the end of the day, think about the possibilities of homeownership that you have the opportunity to bring your borrower. So, yes, it may be an extra form that you have to fill out, or maybe one state has an allocation versus another state who does not, and you have to do a reservation. Um, take the time to provide those borrowers with all of the opportunities that are presented versus steering away from your local HFA. We have a lot of great knowledge and assistance to provide, and we want to provide it. We want those borrowers in homes. And so I would say, thinking about it from that perspective as you go into 2026, which again, looking at our market, we'll see where that goes, right? But yeah, just knowing that they operate differently, but that it's only probably going to add an extra day or two and that, yes, there's a couple of extra forms, but that could be the result, that could end up being in the state of Tennessee up to $15,000 towards down payment assistance. So that's huge. So just thinking about that.
That's a wonderful advice. And I'm just wondering if specifically THDA, whether you have some limited pool of assistance. Do you have a budget that once it's reached, lenders cannot tap
Yeah.
into it anymore? Or how should they plan in terms of specific numbers? Like if a lender wants to plan their sales and allocate a particular number of loans with THDA, how would you advise them to go about it?
So I would tell them that THDA is not set by an allocation. We are actually self-funding. And so that allows us to have more opportunity to provide funding throughout the year versus having to worry about a reservation where perhaps, let's say the fiscal year ends in June, and then starts again in July. Well, what will that next allocation look like? So we're not set. We're not, I should say, confined to a reservation. We actually have the ability to fund throughout the year, as far as the down payment assistance portion of it goes.
And I think the way I see it is that emphasizes the point that you brought earlier, that they need to educate themselves. And even now is a great time to pick up the phone and have a conversation with your business development team, outreach team, spend some time on your website and think about the profile, the programs, how they fit in their borrower profile, the borrowers that they serve, and be ready to reach out to put a THDA program in front of a potential borrower in 2026. Just have that confidence, but build that confidence today.
Right. Well, and there is this great tool out there, Val. It's called HFA One. While every state isn't on this grid, there are a significant amount of states, and you can look up by your state various points regarding their programs and requirements, things like that. And so I would highly encourage folks to look at that. Go out and look at HFA One. Go out and look at NCSHA, National Council of Housing Finance Agencies. There's a lot of great information out there too. And so just taking the opportunities to understand more of the HFA space, I think will help lenders across the board. I'm not asking you to understand our bond structure or anything like that, but just, the general programs and requirements, I think will help lenders significantly.
That's a wonderful place to land this conversation. And we will put the links to those organizations and to HFA One that Jen mentioned in the show notes for future reference. And with that, Jen Green, Assistant Director of Single Family Loan Operations at THDA, thank you for taking us inside the HFA world, even for a little bit, and for making it practical for the lenders who listen to the show.
Absolutely. It was a pleasure, Val. Thank you for having me on.
Thank you again. And to everyone listening, I hope this conversation gives you a few fresh ideas as you think about 2026 and whether that's how your team works with the HDA specifically or with your own state housing finance agency, wherever you are. And if you enjoyed this episode, please follow or subscribe to CMB Connect and share it with another mortgage banker or future CMB who needs to hear it. I'm Val Buresch. I'm also a CMB. Thanks for spending time with us, and we'll see you on the next episode of CMB Connect.